Hello everyone. How are we doing tonight? There won't be any music today because the fucking bot won't work. I really need to make my own music bot. Can I get a quick confirmation that everything works? Everything is great? Please do let me know. How is the sound as well? It's been a while since I've done one of these, so I want to make sure quality is up and volume is fine. Do let me know before we get right into it. Awesome. All right, well, as you may have noticed, it's been a while since I've done one of these. I'm not gonna lie to you guys, I got a little overwhelmed. There was a lot of stuff going on in my real life, right, outside of just trading, and I wanted to focus on that. It is really that simple. It's real life took over. So I had to focus on some real stuff and myself before I could do these. And you guys know I love doing these. They're always going to be free. I love spending my time, helping out and reviewing these things because they're a big part of my trading as well. But sometimes I just have to put it aside when there are more pressing matters to attend. Now, I do want to start doing them back and forth here and there as much as I can, but at least until Rise Statistics is updated, which I could not work on since I had some RL stuff, as I explained. Well, there won't be much PA reviews and live events. But after it's back on, I would love to start back on that schedule of doing a weekly outlook every week and at least 2 to 3 PA reviews a week. That's the goal, all right? So just to keep you guys in the loop about it. But you know what? Enough rambling. Let's get right into this. Yesterday, I spoke quite at length with some newcomers in the community about how I establish my bias. How do I get from a top down bias idea, right, from a longer term perspective? Yes, still going to be uploaded to YouTube, definitely. But yeah, how I get from a higher time frame perspective and direction all the way down to a trade idea. So I'm going to explain it. It's a little different than most people do in this mainstream trading space. A lot of people will tell you to get a bias and, like, they stick to their bias. That's not how I work. I like to have a more dynamic view of the markets, and this is what I'll showcase uh, here during this PA review, pretty much. So, to get right into it, what was I looking for, and more importantly, why today? I want to start at the beginning of the week. So, let's actually bring the weekly opening price here just so we can get a frame of reference. And you know what? Let's go a little deeper and just get a vertical line going. All right. So, this is our, oh, well, actually, that is a little rough. Let's do dotted. All right. So, this is our week. Right. And every time I look in the markets, I look at it from a week to week perspective. That's just how I like to do it, especially in our indices futures. And this week, what we were seeing was a classic buy week, right? A classic profile. So if we talk about statistics, if you are going to have a bullish week, you'll have a way higher probability of forming that low early on Monday or Tuesday, the low of the week, of course, than you do, and then forming the high later on in the week than the opposite, right? And overall, there are much more bullish weeks than bearish weeks when we are talking about indices futures. And if you look, the profile we are looking for this week was going to be an open to an early low to then expand to a high and close after a retracement. Now, when we have a classic buy week, we have a very high probability of having a Thursday bearish candle. Now, why is that? Well, you have to retrace. And that retracement often aligns with Thursday. Why? I don't know why. I don't care why. I follow the statistics, and that is what I like. That this is my whole mentality about keeping things simple. I don't need to know why it's going to happen. I just need to know there is a high probability of it happening. So now that we have that confirmation after Monday went down, formed a low, Tuesday went up, confirmed that into a swing low. Right, this is a little hard to see actually. So let's just bring back only the opening price here. It formed a swing low right at this low right here. This gives me my confirmation. If we look at ES as well on our higher time frame, we can see some lower time frame SMT with ES actually forming the low of the week on Tuesday. So that is an additional confirmation. So now that I can trust this as a low of the week, what do I expect on Wednesday? Well, of course, expansion higher. Why? We invalidated the premium array of this range. This is what I use. I use ranges. This is the range that we are trading within. It is from a swing high to a swing low. Now, in that bearish range, I am going to refer to the first premium inefficiency. As you can see, it is the first inefficiency in premium. If I did not have one, what would I do? Go down a time frame, looking at the same range, and have another inefficiency. But now I have one on my daily, so there is no need to do so. I want to be very detailed here because I'm going to use this video as something to send to people when they ask me, how do I establish my higher time frame bias and everything, right? I use ranges. I look at the first premium since this is a bearish range. So since we closed above this, my bias is going to be towards this extremity. Now, why? Well, very simple. We showed disrespect, right? We showed a lack of respect of our first premium inefficiency. This is my only objective needed for retracement. So if we were to continue down, we would have respected this area and not closed through it. Because of this, my new objective becomes the extremity of said range. But once that objective is met, what happens next? Well, my whole understanding is about the fact that we will target, we would look to break ranges, right? Look for external liquidity. This is how it was, how it came to my knowledge is through external and internal liquidity, right? So liquidity outside of ranges, added to extremities, and within ranges, inefficiencies. And as we can see here, after taking out this level, we can then look for retracement, right? You took out this level, and more importantly, you failed to close through it. What does this indicate? Well, I want some downside. And of course, now that we have broken a range to the upside, I'm going to look at this new range that we formed. And I am going to look at the first discount inefficiency, which is this order block right here. That aligns with the weekly open, right? It is Monday's candle formed a bullish order block. So what is my bias after we've taken out this extremity? I can now look for retracement. There is currently SMT forming. Of course, for it to be confirmed, you need to wait for this to form a swing point, which will basically happen after today once this candle fully closes. But you have currently SMT. You failed to close after taking out this important level. I look for retracement. I draw my range, premium and discount, and I have my first discount inefficiency. Now I'm going to use this body of this candle with order blocks because there is no adjacent fair value gap. If there was one and it overlapped, I would use the entire candle. So now I have two retracement levels to look for. And if we are to continue bullish, I want to see respect of these levels. Now, if we look at the current daily close, we close respecting these levels, rejecting these levels. So that is a confirmation for me. Now, I won't be able to be very precise here drawing it, so I'll just leave this consequent encroachment for now. But this is all I do for my higher time frame bias. So I use ranges, and I look at how we interact with the first or premium or discount, depending on the specific one. Now, we had a confirmation with SMT and a failure to close, which gives me plenty of insight, along with the fact that we are Thursday, in a classic buy week, gave me all the insight to be bearish today. So that's how I go about it. Now that I'm bearish, what is next? What do I understand? Well, I understand that taking trades that are short are going to be expansion, and taking trades that are long are going to be retracements. That doesn't mean I can't trade longs because I'm bearish. It simply means that I understand that when I'm going to be taking a long, here, actually, I'll make a better drawing than this. So let's say this is our range. We have a bearish range. If I'm taking a long, I'm going to be stopping at the first premium inefficiency of that range to then look for continuation short. And if I'm taking a short, I'm going to be looking for us to break ranges. Expansion, retracement. This is what bias means to me. Then I'll go down to a 15-minute chart. This is just the time frame that I like to look at my entire day up to that point, right? If you look at 9:30 here, this is what I see. It's actually, let me go in replay mode. I think that will be a little bit better, easier for you guys to understand. So this is what I see at this point. And of course, I have my order block here. Let's bring it a little closer. I have my order block here. I know that this is my bias for the day. But now to confirm that bias, what do I need? Well, I need structure. What do I mean by this? I need a classic AMD pattern. I need to see some form of accumulation. This doesn't really matter. The main part that matters is I want to see a manipulation counter to my target so that I can then have a move to my target. Do we have exactly that? Yes, we do, right? We expanded a little bit at the open, formed some consolidation, right? We went one way, we went back the same way. This is a consolidation area. And then we went and we swept the current, well, not current day's high, but London high here, and actually current day's high if we look at ES right here, which means what? Well, we have SMT here as well, right? Now you might ask why my indicator does not showcase it. Well, it's very simple. It's too far back. If I was in an hourly chart or a 30-minute, I would, but I don't want to see SMTs that are too far back. These are just part of the settings I have with the pivot look back. But you have SMT, you have a rate of a key area, which is our London range. So you have everything that aligns beautifully for a perfect trade chart. Also, we can bring in the new day opening gap, right? Pretty sizable gap. But honestly, as long as we trade back into it, I don't really mind. It does not need to be fully filled. And once again, that just goes back to statistics here. Statistics tell me that this does not need to be fully filled at all times. Overall, everything aligns beautifully. You actually have the new week opening gap, but of course, the order block is actually at the weekly open. So everything aligns in that direction. I have a clear short. Now I'm going to be looking to also target previous day low because it aligns beautifully with some relative equal lows. This is why I love the 15-minute. But the truth is, you would have current day's low and then the rest. What happens then? Well, let me actually remove replay mode now. What happens then right at 9:30? Let's actually remove the opening range for now, just so we can have a bit of a clearer picture. Right at 9:30, we expanded. Now, why is that, right? Why did we expand right at 9:30 instead of doing our traditional Judo swing, right? A move in the opposite direction. Well, we had news today at 8:30, and that is where our rate occurred that we just discussed with the SMT that we can actually see by looking at, on my indicator, the current day's high, right? Current day's high is here for NASDAQ, and current day's high is here for ES. So since you've already done that manipulation at the time of the news, confirmed with SMT, this tells me that there is no need for any additional manipulation, so we can start expanding right at 9:30. This is something that I had not mentioned in a while, but I've always said it like this. It's when can you expect expansion at the 9:30 open rather than manipulation? Well, when you've already done your manipulation. And how do you confirm that specific manipulation? You look for time-based event, confirmed with SMT. That's exactly what we got today. So from that point on, what's left? Well, I wait for 9:30 and I take all the shorts I can. And if I see us expand quite a bit, then I can also look for some long retracements. What happened at 9:30? Well, we can see a little bullish breaker happening here. Does this matter? No, because I'm never taking that trade. Why is that? Well, first of all, oh, give me a sec here, guys. Sorry, gotta handle something. I do apologize for that, guys. My dog got a hold of something that he should not have been getting. Getting back into it, why am I not taking this long? You might say, well, look, we just took out Asian current day's low. Yeah, okay. We have some form of expansion, right? What is that? That's probably 80 points. Just under 80 points. So why am I not taking this trade? Well, it's very simple. I'm bearish until that order blocks. I'm expecting a lot more expansion. This is the order block in question. Let me actually bring it even closer. There we go. So this is the order block in question. And I'm bearish until we reach that specific level. Moreover, when we created that breaker block, there was counter SMT, right? So there was SMT against my idea. So what do I notice from this? Well, I'm going to skip this breaker. But what if you take it, right? What if you didn't have this specific insight and you just decided to take the first breaker that occurred? So let's talk about it. So you would have entered right here with a stop here. Why is that? Well, you have your, if I zoom in, it's a very small one, but you have your entry right on this inversion fair value gap. You can't place your stop further than the breaker block manipulation point. So you're going to go here. You're going to go target whatever it was at that point in time, right? But you're going to use the range here. Let's actually bring back the right one. You're going to use the range here. You're going to target the first premium and efficiency. Usually I would be in a 5-minute chart for this, right? So there's your trade. This is your full target. This is your trade. Okay, well, you got stopped out. Didn't work out. Now, I explained to you guys why I would have personally skipped that, right? But maybe you took it. So I like to mention these things. Okay, so you're down 1R on the day. What happened right after? You had another setup, and this is the setup you're looking for. This is the short. Now you're going to look for 3 PD arrays. So you have your entry PD array, fair value gap, you have an order block to the left, and another order block. So this actually allows you for a pretty tight stop loss right there, which is great looking at your further objectives. Now, am I going to take profit along the way? Well, if you're skittish, maybe, but for me, there was no reason to take profit before the order block. Now, I don't like to be, how can I say this? I like to always be pessimistic, right? So this is a very clear objective for me, right? Relative equal lows are always very clean. I look at consolidation, I see relative equal lows, some others right here. These are very, very clear targets. So let's say you took profit at these targets. Well, the first one, does it offer more than 1.7, which is my rule? Yes, it does. So maybe you decided to take a partial at the closest objective possible. Perfect. Then you're break even and you're holding that trade until your final objective, which is going to be the order block, but more importantly, looking at a key level between the order block level and the mean threshold, you have previous day low. So this is just a super simple trade. Even if you took the long before, you're down 1R, you're reimbursed plus profit at that relative equal low right here. And today, well, we got a good one. It ran quite a bit, right? I think that was like 250. Oh, more like 350 pretty much that we ran. I got 250 out of that. So, oh yeah, well, with the entry right there, definitely, yeah, around this mark. That makes sense, actually, previous day low. Sorry, I'm just looking back at it. But a very simple trade that didn't give you much hustle, right? You went straight back to your break even, and then you just ran, right? 10 a.m. just ran, didn't give you much trouble, just a slight retracement. Very low resistance price action on a day like this. But once again, I'm just going back over it. Even if I understand that this long is not a good trade, well, what if you took it because it aligned with everything, right? It's like a filtering option. It's like, okay, well, I have a key area that we just took out. We formed a bullish breaker, and we have my my entry PD array. Okay, then take the trade, right? Don't think about it too much. And then you get stopped out. Well, that actually created the bearish breaker that gave you your trade. Now you might say, okay, well, if I trade every single breaker, I'm just going to be going back and forth. Well, it's not every single breaker. It has to align with something, which is key points of interest, right? I know my day is going to be bearish, at least from my higher time frame understanding. So I'm going to look for shorts to expand as they have, and I'm going to look for longs to retrace. And we'll look at some longs down here after a more interesting retracement opportunity after we take out previous day's low and we reach all of our higher time frame objectives. Now you can look for a reversal and take some longs, but not before that. See, I took that original bullish setup, missed that short, then chop city at 10:30. Yeah. Right, 10:30 is a big mark for me. Well, you'll actually see it. I have it as part, see, I call it expansion. I have it as part of my custom levels on my opening prices indicator. I'll remove it for now. But 10:30 is a very key area for me. And if we bring back now the opening range levels, we'll notice that, hey, this forms the opening range. We swept the opening range. From that point, I can look to take some longs. Now, we didn't have any clear entry for longs. That is the truth until we got way deeper over here, right? This IFVG is the first actual long entry you might see. And if we take that trade, you would be right here. You would have IFVG as your first PD array. You would have this order block right here. And then you would have the fair value gap just below. So you're going to place your stop at the fair value gap candle. Now, did you get stopped out? Well, not initially, but you never made it to profit before getting stopped out in this area. And from this point, you might consider, well, hey, let's look for some PM longs. The only thing I'll trade in the PM is a lunch trade, which means the only thing I'll look to consider is perhaps a continuation of this move. But the truth is, if you're still looking for trades after the morning ran 350 handles in the direction you should have expected, then you're not doing it right. Like, there is a reason why I have rules that stop me in place after 2.5 trades. What does that mean? 2 full trades, 1/2 risk. So in this case, if I had 2 full trades and 1/2 risk, and I force myself to trade always those full 2 trades and 1/2 risk, I would have 1 loss, 1 win, both with full risk. So minus 1R plus whatever R. This is probably around 3.1 realized. That's what I did today actually with my take profits. And then you have 1 loss after half risk. That's only if you forced yourself. These are all valid setups. One of them worked, 2 of them didn't. So you might say today that, hey, this is a harder trade. Well, I skipped the first one because that is not a trade I'm looking to take because of what I explained at the beginning, and took the second one, and then I was done for the day. I don't need to keep trading. It's all about psychology at this point, to be honest. But these are the hard set rules. And I wanted to do this PA review to really showcase from a top to bottom perspective. I hope I've achieved that. I'm open to any questions, right? The people in here who've been following me for a while already know all of this, but I'm quite happy to answer any questions from you guys. It was a good trading day for me, in case you guys are wondering, right? A very nice, easy trade. We love these. And then PM definitely chopped a little bit more, right? If you didn't take some trades in the AM, might have had a short loss here. That is the only trade I can potentially consider because of the lunch rate, right? Take out lunch high, look to target lunch low. But after we trade back above here, this is just chop. Seeing a few of you guys type, so I'll give you guys a second. Can't believe we did all of that in 20 minutes. I guess I need to do more of these PA reviews to understand once again to be slow and steady. Due to our time together, I knew to basically give up on any PM decent setups. Awesome. Save my fucking DIN accounts yet again. Love to hear it. Love to hear it. Right, that's the point that I'm thinking. I'm always repeating myself, and I do on purpose. I know I am doing it, and I keep saying it. But why do I do that? Because it's repetition that really just burns something in your brain. I have done thousands of backtests around this specific model that I have now been trading live for 2 years and a half after making it, right? I don't remember, to be honest, because it's just more of the same. It's just the same single model that I built around exactly that. I wanted to be able to catch the right direction. And 80% of the time, I'm right with my bias, right? Like today, for example, bias was bearish. I'm right with my bias and objectives. And then 70% of the time, my trades work because I always align with that specific idea. Now, bias for me is not about I can only take longs and only take shorts. Today, retracement longs did not work. Often they do. Often both sides are offered. For the first bullish breaker, I thought you needed a bullish candle to count it as a breaker block. Yes and no, okay? Here's the thing. There's no bullish breaker here because there's no bullish candle. But as you just said in the end of your message there, if I was trying to be very precise, I would go down to the 30 second. Oh, now it's kind of weird with the previous weekly low. So let me just remove that. So I would go to the 30 second, and now there is a bullish candle there, right? So I understand what my 1 minute candle means, and that's why I want my indicator to see it as a breaker block. But if I'm trying to be precise, then of course I won't be using that. Now you can see my breaker type is currently on range, right? If I use it as last, which if you guys don't know, in the indicator, last means it's going to use the last candle of the correct direction from the breaker range. Consecutive is going to allow for more than one, and range will just show the entire thing. So range gets a little cluttered, right? I like to use consecutive more often than not, so consecutive candles. But if I go in the 1 minute and I had that entire range, it's just going to draw out the range for me because it can't find a bullish candle within it. I no longer try to be precise with it, Alex, because the indicator just does it for me. That's the truth. The indicator knows my allowed threshold, which in this case, where is that? It's right here. It is 5 points. So it knows that it can overlap with the entire breaker range, and the indicator just does it for me. And what I love more than anything in the world, honestly, is when I look at it live and it just auto adjusts the unicorn. It's like, oh, well, now we traded a little lower, so now your new unicorn is right here because we didn't get an entry yet. Sorry if I'm glazing myself a little bit here, but I really do love this indicator. I spent so long making it. Tell you what, since price did retrace deep, closing below weekly open into this order block, what are you thinking we might see for tomorrow? I want to see Monday be low of week, but I'm doubting we print high of week tomorrow. Honestly, after the amount of movement we got on Wednesday and Thursday, if we don't have a big driver like Trump opening his fat mouth, well, I don't see us moving really much. I see us doing an inside day, to be honest. We've already completed any retracement opportunities, so for me, it's either an inside day or a bullish day. But I'm going to be honest with you guys, I'm pretty much done for the week. Got my good trades in, so I'm going to be very picky tomorrow, and maybe I won't even take a trade or perhaps take a half risk trade. Definitely won't be picky. The move of this week has been completed. I don't require more from it. But if tomorrow is going to go crazy and start expanding higher and making new high of week, well, I want to be there. Just don't want to be there with heavy risk. Did you trade Wednesday? I did not. I did not trade Wednesday. And you might say, oh, well, you probably wish you did because of how much it moved. No, because it was bullshit. It was very hard to fucking trade during that day. I looked at it after the fact, and I'm very happy I missed it. I called the Monday low. I took some shorts there. Tuesday, took a few longs there. Well, a few stabs at it, at least. I got basically a medium day. So I got 2 large winning days. My average that I need to be at is 7R a week. That's my goal. And I've achieved that already. Does that mean I'm done trading? No, but it does mean I want to protect that average. Glad I missed it. Awesome. Do we have any final questions before we call it a day? Does not seem like it, but I'm going to give you guys a final chance. Been a while since we did one of these. Thank you all for showing up in numbers. I see some new faces in here as well, right? You might have seen these videos on YouTube. Well, this is what it feels when it's live. Tell me what you prefer. Peer reviews back. Yeah, that's what I said initially. I want to be starting. I have a lot of things to deal with IRL right now, so they won't be on a regular schedule for a while. But they will be back at some point, definitely as they were, sorry. But for now, it's just here and there. I see some value. I got some time. Let's do it. Right? There were a lot of questions yesterday, so I really went from start to finish about my higher time frame and how I bring that into a trade idea. Hopefully, it brings a lot of value to you guys. I'm definitely going to be adding that one in the resources channel. Definitely believe reviewing the more wild days will be very good for newcomers. Yes, sir. Maybe some days weekly outlooks. Yes. Those will all be coming back, but not before Rice Statistics is complete with this new update, which I wanted to be in January, but I basically did not work on it for the last month and a half because I had some stuff going on, as I said. So now that that stuff is out of the way in the past, I'm restarting to work on Rice Statistics, which is a harder task to do than to say. It's really hard to have this big puzzle that you were completing and then just stop halfway. So I'm getting back into it, and once that is complete, yes, the schedule for the events will come back as it once was. Should we add that opening range concept? For sure. Honestly, just send me the details as you said you would, Wolfe, right, in the past. So just send me those details and we'll look into it. On that note, though, we're going to call it a night. Of course, this will be uploaded on YouTube if you guys want to go ahead and rewatch some aspects of it. I will also perhaps make a small announcement because I will be adding it to the resources channel. You guys have a great night. Good luck trading tomorrow. As always, thank you all for showing up in numbers. It is lovely to see you guys have not given up on me, even after very little events in this Discord. Welcome to the newcomers as well. You guys have a great night. Bye, guys.